GM, everybody. Welcome back to your bi-weekly FraxCheck, your bi-weekly vibe check. I am your host, Capital K, and I will be taking us straight to the source of truth via checking the chain. But before we dive in, please make sure you smash that subscribe button and tap that bell notification and head over to flywheeldefi.com for all your alpha needs. And guys and gals, this week, or these 2 weeks on FraxCheck, I call it signs of life. As the name suggests, I see some signs of life on chain. But first, let's always start with our flagship product. I'm going to start us off here a little bit hot with the Frax stablecoin actually being down lowest for the year at 650 million supply. This represents a 3% decrease in the Frax stablecoin supply, which is obviously not what we want, but also commendable for us to be able to go from 2 point something billion down to 650 million within the span of, 2 years or so and not depeg any way through. So that's commendable there. Following, we got to take a look at the peg because, every stablecoin needs to monitor the peg. Here, we saw that on the dashboard, we went as high as $1 and as low as 0.999. But you know me. We can't just trust the dashboard blindly. So I head into the markets on 1 inch and I smash the books with 80 million fracs to give us an exchange rate of 0.9917 for USDC. And this is largely due to the imbalance inside the Frax BP pair that we see here with like 94 million or 70% Frax and 30% USDC. If history were to be any guidance, we would probably have to do another rebalancing here. The last time we did this, it was with a very, very large size, almost 300 million or so. But fortunately, this time it's not going to be that large. So that is what I have to report on the Frax stablecoin. In terms of liquidity. Now we move on to the balance sheet, which here is actually very, very interesting and is a good lesson for all of you folks listening here. And the cardinal formula in all of finance and accounting is assets equals liabilities plus equity. And here on the balance sheet, we have all three variables. Here we see that our assets actually decreased by 1.6%, down $13 million. Previously, we were around 814 million. Now we are 801 million. On the other side of the balance sheet are our liabilities. The liabilities actually decreased by 19.6 million, representing a 2.6% decrease, landing us at 720 million from 740 million just 2 weeks ago. And guys, remember, if we were to decrease in assets but decrease in liabilities even more, the formula has to balance. Assets equals liability plus equity. That means our equity increased. Here, we saw a nice bump of 6.5 million, representing almost a 9% increase from 2 weeks ago added into our treasury. This is really, really good news because we want to extend this buffer as large as possible because this would effectively help us get as close as possible to making up that 100% CR. So this is great news to see. Speaking of CR, let's take a look at where we're at. And you folks could follow us at home and do this yourself. Go to fax.frax.finance, head over to the Frax balance sheet tab, and you can play along. So you take the total assets, in this case, 801 million, subtracting the locked liquidity of 119 million, giving us treasury assets of 682 million, Then you divide that by the total outstanding liabilities of 720 million, giving us a collateral ratio of 94.6%. Now, this is an increase of almost 1% from 2 weeks ago. So we're heading towards the right direction. Granted, we've been here before, and we had also decreased from here before. But hopefully by the end of the year, where I do my final Frax check, we get to see this number in the 95s. All right. Moving on, we have our liquidity as a service product, which is our Frax BP. Here we see a pretty much flat 2 weeks in terms of TVL for Frax BP at 134 million. And on the volume and utilization front, we facilitated about 19 million in monthly volume so far in December, which represents about 14% utilization ratio. Not that much, but also, where people are not trading stable coins nowadays, right? Everyone is kind of risk on. So we need to adjust our expectations accordingly. Next, we got to take a look at the comparison of Frax related pools and positions in curve. Here, we see that Frax BP, as mentioned, is 134 million. Frax 3 CRE is 9 million. Frax PP is 35 million. And we have a new contender. This contender is PYUSD, and Frax has amassed $13 million worth of this stablecoin. So when you add all of this up, we are literally 190 million versus 193 million for the 3 pool. So we're neck to neck with the 3 pool, and hopefully we can overtake it again. And as a quick reminder, at one point in time, we were 3x the size of 3 pool. Now we're barely 1x. So good to see that we can scale up so largely, but also scale down equally when we need to. So the nimbleness is highly laudable here. All right, moving on. We have effectively the final product for the stablecoin, which is SFrax. Here, users are able to deposit Frax and effectively, or stake Frax and effectively earn the treasury yields. Right now, we have a TVL of 20.8 million for SFrax. Though this represents a 30% drop from 2 weeks ago, and even larger percent, almost 55% drop, I believe. Let me double check my math. That is correct. We are down 55% from the very peak of 45 million. So big pain. However, the APY has been consistent at 5.4%, and the number of holders of SFrax has been consistent at 186 users. So not bad there. At least we're holding steady in terms of users and APY. Moving on, we have our second stablecoin, which is FraxETH. Here, I want to take a moment and celebrate a little for these, small victories. We punctured the 300K supply level. We are now 300,781 FraxETH in existence, which is an increase of 2% from 2 weeks ago. Now, where are all of these FraxETH hanging out? Well, actually, they've been exactly in the same spot they were 2 weeks ago. 75% is in SFraxETH, 6% is in FraxETH, 10% is in FraxETH, and 2% is in FraxETH, with the remaining 6% floating in the ether. And not to forget, FraxETH is a stablecoin, so we got to check what the peg is going on. Here, we have a 0.998 exchange rate when swapping 3,500 FraxETH into ETH. All right, so not bad, very strong exchange rate, matter of fact. And this is in conjunction with having a pretty, imbalanced-ish pool between FraxETH and all the other ETH alternatives. Here we have 73% in FraxETH and 27% in all the other ETH in terms of balance. And we have a total TVL of about 168 million. So fairly good there. This is surprisingly good for this level of imbalanced pool. Now moving on, we got to take a look at how we stack up against our competitors. Our market share for FraxETH has been pretty much stagnant at 2.5%, if I may say. And this isn't great to see. We are obviously smaller than our competitors. Therefore, we need to move faster than our competitors, but we have yet to do so. And here we have Lido at 77% of market share, Rocket Pool at 8.7, Binance Staked ETH at 6, and then FraxETH at 2.5. We, over the last 30 days, we have an increase of 3.6% versus Lido at 3, Rocket Pool at 3.3. And that's just not what we want to see. We want to see us growing by leaps and bounds and multiples ahead of those two because they are, again, quite large relative to us. Rocket Pool is like almost 3.5x our size, and Lido is obviously like 30x our size. So we need to be growing much, much faster than we are currently if we ever attempt to catch up to them, which we should, because if you were to look at the yields, we are amongst the top best yielding LSTs. You see here that for this 2 weeks, since we're taking a snapshot in time, we are at 4% in APY. Granted, that is less than Anchor's 4.3% in this snapshot, but we need to compare the fact that we are 665 million in TVL versus Anchor's is 56. Plus, if we were to look at the year-to-date return for FraxETH, we are outperforming Lido, outperforming FrxETH by 45% and outperforming FrxETH by 28%. And these are not cherry picking numbers, guys. This is literally looking at the beginning of the year to date, how you would have fared if you had just went with FraxETH instead of the other two. So the proof is in the data, as they say. Now, moving on, we got to take a look at the final stablecoin, which is the FPI. This is the Frax Price Index. This effectively tracks the CPI, which oddly enough just came out this morning. And we are pretty much flat in terms of the annual inflation index, and also flat in terms of supply. We have 84.5 million FPI outstanding, all tracking towards this 3.2% annual inflation index. And fortunately, we're actually 4% above the peg. That means anything in excess of the liabilities accrues to the equity side. Here we have 92.8 million in the Treasury TVL. And with that Treasury, we were able to generate 4.8 million in equity value. This has increased 600K over the last 2 weeks. So clearly FPI is printing for VE FPIS and FPIS holders. Not bad, not bad. Here, now switching to one of the sub-protocols that support all of our stablecoins, which is the Frax Lend. And Frax Lend, I just want to say, we are reapproaching to a new, actually reapproaching to a high of borrowed value at $71 million. As you can see in the graph here, we haven't touched this level since I would say May of this year. So it's good to see that we're finally picking up again. In terms of utilization, we are at 79% out of the total Frax Lend. And the collateral value has reached literally the same height as it was in the beginning of February. So it took us a long time to climb from a low of like 50 million all the way up to 200 plus million for the collateral value. Okay. And that 50 million came from the USDC DPEG event. So that was a huge hole for us to climb out of. And I'm glad to see that we're making new heights here. And lastly, I forgot to mention that we are currently at 284 million in TVL. So, I was speaking with Sam Cass earlier this morning, and if you were to add up all of the TVL that Frax's products encompasses, it pretty much scratches 2 billion. And on top of that, there's only 8 core team members. So if you take a TVL per head calculation, it's almost 250 million that is TVL per person in the Frax core team. Kind of nuts. I want to see other people using this TVL metric just for us to compare who's, I don't want to say the best, but definitely competitive here. All right. Moving on, we have the last leg of the DeFi Trinity, which is the Frax Swap. Here we have 70 million in TVL, which is an increase of 10% from 2 weeks ago. This is one of the largest increases we see, and as you could tell from the chart, if folks are looking, we are close to like the all-time high for the TVL for Frax Swap. So that's really good to see. And in addition to that, for the month of December, we have facilitated 45% of that TVL, putting out 31.5 million in volume. So great to see there too. And I'm happy to report, additionally, that the FXS Frax pair is above 15 million kind of consistently now. For the 7-day volume, we facilitated almost 19 million in volume in the FXS Frax pair. And obviously all the other pairs are also picking up steam as well. Now, shifting gears, we're going to talk about profitability. Here is the show me the money portion of our slides. Kicking off with Frax Lend. As mentioned, Frax Lend is one of the most profitable product under the Frax suite of products. Here we see that the Frax AMO actually increased by 8 million, meaning they started lending out 8 million more Frax into the Frax Lend to kind of capture this risk appetite per se of the users. And it went from like 58 million down up to 66 million now so far. And with that, for December, this is just 2 weeks, we have generated $190,000 in revenue. Okay. I know you see here that the last 7 days, we only generated 50K, but the week before that is where we generated the bulk of the current earnings. So if you were to average out the 2 weeks, we pretty much pull in 95K per week. That's awesome. That is like, remember guys, we scaled from like maybe 2 mil per year in annual run rate. Now it's almost like 5 mil per year in annual run rate. That's just awesome to see. Now, if you were to take a look at the APR that we are earning on the money on the Frax that we've lent out, that is an 8.5% APR. In addition to this APR, I gotta talk about, as unfortunate as it is, there were some liquidations in December. Not just some, well, actually just 2, but they were definitely size. Like your size is size here. We saw a profitability drop of, or not profitability drop, but we saw a liquidation of a very, very large size of 188,000 Frax. And the liquidation amount was the liquidation profit was almost $11,000 on liquidating $188,000 of Frax. That was for the FrxETH Frax pair, so folks should be definitely careful out there. And unfortunately for the same user, same borrower, he got hit with the WBTC Frax pair, losing out on another $20,000 Frax in liquidation fees. Oh my goodness, user 0xF17 ... AEF91. We feel for you. Thank you for contributing to the revenue bottom line, but definitely let's be careful out there. Although as much as we welcome the revenue, this is not what we want to see. We want everyone to have a good time, earn good yields, and everybody is fairly compensated. Now, as I mentioned earlier, actually, with the FPI, we are printing this month in December. FPI generated basically 81,000 in rewards for the month of December so far. So the treasury was able to farm 81K. And you guys, if you could look on the second graph here, it kind of tracks the FPI revenue and expenses over time. And we were going through a pretty dark period between June all the way to like October, where we were pretty much in the negative. But now, ever since October to November, obviously leading into December now, we started seeing a green and a whole lot of it. So that's great to see. And now lastly, we have the FraxETH revenue. And here, you guys could also, again, do this at home. Go to fax.frax.finance, head over to the FraxETH page, and scroll down to where you see the validators portion, and you can see how much average income per day is being earned, which is for this week, over this 2 weeks, is 23.7 ETH per day. Multiply that by 365. Then multiply that again by 8% because that is the revenue fee share that Frax gets on all of these FraxETH. Then when you divide that by 12 months, you receive about 57.7 ETH per month, which translates to about 127K. And if you annualize that, we get about 1.5 million in annual run rate for FraxETH. Just imagine the explosion after FraxETH V2 comes out and that we can actually have anybody come in and run this model. So that is extremely bullish to see. And with that, I'm going to leave you guys with 3 TLDRs for the 2 weeks so far. First, we had a drop in Frack Supply, down 20 mil from 650. And then, secondly, is our FraxETH hits 300K in supply. And the last TLDR is that Frax purchased $13 million worth of PYUSD over the last 2 weeks. And we're not here to speculate, nor are we here to insinuate, though there is definitely something brewing and interesting that Frax has purchased 13 million of PYUSD. That is the PayPal USD added into the treasury. And with that, I'm going to bid you adieu and wish you guys have a wonderful rest of your week and a wonderful holiday season. See you soon. And if you want to talk and join the conversation, head over to Flywheel DeFi on Telegram and make sure you follow us on Twitter at Flywheel DeFi. And obviously, go to flywheeldefi.com for all of your alpha needs. And this is Capital K, and I will see you next week. Peace.